Welcome to Ask the Advisor, where we invite people who specialize in financial education, financial services, financial products, and they really are financial experts to come to help us understand important subjects related to money. It's time for us to stop getting our financial advice from our barbers and our beauticians and from TikTok. We need to talk to real live people who are licensed. We need licensed people to do our hair. We need licensed pilots to fly our planes. We need licensed financial professionals to help us with our financial strategies. Many of us have money, we spend money, but we don't have a strategy. And that's why DFREE exists. DFREE is to help people develop strategies. We start with debt reduction because your wealth equals your assets minus your liabilities, and debt is a liability. But that's just the first step. You don't get rich by getting out of debt. You get out of debt as the first step towards creating wealth. So welcome to Ask the Advisor. We have contact information that will be available throughout. I've got one of the outstanding financial professionals that I know with me as a guest today. But let me tell you why today's topic is so important. We're going to talk about insurance. And personally, insurance is absolutely critical to who I am because my father died at 47 years old. My mom was 44. I was 24. My brother was 21. My sister was 8. And I want to tell you something. When my dad died, I was living paycheck to paycheck, using credit cards as though it was income. And if my father had not had insurance, my mother might have been homeless. I couldn't help my mother do anything. But when my dad died, he had life insurance, he had mortgage insurance, he had all kinds of insurance. And as a result, my mother was able to continue living, though she was grieving. She wasn't grieving while broke. So for me, personally, insurance has played a critical role in my life. And then I've been trying to help people close the wealth gap, fight for justice all of my adult life. And here's the raw truth. When you look at the difference between what the median net worth for white America is and the median net worth for Black America, doesn't matter where you look, the gap is so wide. The truth is, we are not likely to close the gap for those of us who are over 45 years old. The reality is, you're not going to gamble your way to closing the gap. You're not likely to save your way to closing the gap. And even if the minimum wage is increased to $20 an hour, increasing our wages is not necessarily going to help us close the wealth gap. 95% of us, if we're going to close the wealth gap, is going to be for our children. And the most likely way, the most strategic method of closing the wealth gap for the next generation is through insurance. Now, the challenge is, one, we've got to understand insurance, understand the options, understand the opportunities, and then we have to understand how to afford insurance. I always thought I didn't make enough money to buy insurance, and now insurance is high on my list of priorities in my budget. So we're going to talk about insurance, and I've asked someone to come to help me answer the questions that I've been asked for the last 20 years. DFREE is 20 years old now next month. And there are some questions that I'm asked almost all the time when I talk about insurance. So rather than give my little bootleg answer, I decided to invite a financial professional who is absolutely qualified to answer the questions. Her name is Sylvia Alston. She owns her own firm, and she'll describe what she does in a moment. It's called Momentum Risk Management. And I am absolutely thrilled to have the CEO of a risk management firm with me today on Ask the Advisor. Sylvia, thank you for being with me.
Oh, thank you for the opportunity, Doc. Anytime you call, you know I am willing to answer. So thank you so much.
So Sylvia, first of all, tell us, what is Momentum Risk Management?
Yeah, so conceptually, let me go back a bit, because while you were talking, I was getting emotional because your father passed away at 47. Mine died at 48.
Wow.
And I am 48 this year. My father had a brain aneurysm at 45, the year before I left for college.
Wow.
And he had life insurance. He had life insurance, but he was disabled. And a lot of people, we don't talk about death, but we don't talk about disability just as much as we don't talk about death. So
Right.
my father was disabled for 3 years before he died, and leading into that death, he was miserable. But fortunately, he had insurance. He had disability insurance. He had wages coming in, and then he had life insurance. And so I was able to continue my education. And it makes me very emotional to hear people's personal stories about what ascribes them, or what, likens them to the insurance industry. Because for every time you ask that question, you'll get a different answer. I've been in this industry for 25 years. Every single time I talk to somebody about their personal understanding or story with life insurance, you'll get a different answer. So I love that. I love that.
Right.
But essentially, we started momentum risk management as a response. I started, you talk about DFREE started. This is my 6th year as an entrepreneur and an insurance owner this month. I started on Juneteenth of 2019, and it really was to answer the question that I wanted: career independence. I wanted to stop sitting in boardrooms, begging for people to see the business case on the need to do business with communities of color. And I wanted to center the lives of people who look like me, so they would understand why it was important to have these conversations in the first place. And so momentum risk management was really born out of a need for a diverse and consultative risk management practice that would have these kinds of conversations and center the lives of communities of color.
It's so interesting, in spite of the fact that my dad died at 47. And by the way, my dad died from medical malpractice. The doctor gave him more anesthesia than his heart could handle, and it induced a heart attack. But I never equated insurance with risk. In fact, the word risk wasn't a part of my vocabulary for a long time. But by the time I launched DFREE, I understood what risk really meant, and I understood that I was taking more risk than I should by not having adequate insurance. And so when I wrote the book, there's a chapter in my book on insurance, but it's called Minimize the Risk. And that's why I appreciate you so much. So let's just cut to the chase and get right to the heart of why I needed to talk to you. The first thing I think people tell me when I talk to them about insurance is that insurance is too expensive. I just can't afford it. Let's talk about the cost of insurance and the options people have and how insurance can be affordable.
Yeah, well, I think what always kind of confuses me is that people who wait to have those conversations about insurance honestly don't understand that they are helping the cost of insurance to raise. Because when you wait, the longer you prolong having these discussions about insurance, you are guaranteeing that the cost of insurance will rise. And that's because insurance is predicated upon the age of purchase. Life insurance is predicated upon really 3 things: the age of purchase, how old you are, your health at the time of purchase, and then how much you're looking to purchase, right? So if you wait until you're older, or you wait until you're less healthy, the probability that you're going to pay more for it is 100%, right? So it's best that we debunk these myths as early as possible in our communities, because the earlier we buy insurance, the less we'll pay for it and the more affordable the insurance will be overall. And then over the course of our life, one of the things that I think when you're talking to different communities about the needs of insurance, a lot of people think that insurance is really just to put them in the ground, that it's not actually about for life to continue.
Right.
So I think it's so important to talk to culturally competent advisors who understand the needs of communities after a loved one has passed on, and what needs to continue in terms of the finances, what that person was responsible for, what kind of expenses that person was responsible for, what will need to continue in that family if that person is deceased. And those are the kinds of conversations that people don't often like to have.
Yeah. And, just the word expensive is a comparative word. Expensive compared to what? I've talked to young people who spend a lot of money on a regular basis on things like hair and fingernails and,
That's right.
and car washes. I've talked to young men that spend $50 or $60 a month on a car wash, even though they have watered their house. They take their car to the car wash, and $50 to $60 a month for
Absolutely.
a young person, 22 years old. I mean, talk to me about that, because That's
Absolutely.
not, that's cheaper. It's cheaper to buy insurance than it is a car wash.
Absolutely. Yeah, I have a client, her daughter is she's the vice chair of her company. They have a panty design company. It's a manufacturing company. And the mother is 48 years old, same age as me, and looking to get out of the company in the next 5 years. And the daughter is probably going to take the helm. Her daughter is 25 years old, and they just bought a $1 million life insurance policy. And it's $50 a month, $600 a year,
Car
uh,
wash.
for 30 years for 30
Right.
years coverage. So it's like
Yeah.
it's and those are the kinds of myths that we have to debunk on a day-to-day basis. The earlier you buy it, the probability that you're healthier. Those are the times that we need to have those conversations. And people really don't understand, Doc, that when you are older, if you are obese, if you're a smoker, if you're a drinker, those comorbidities that go into that's what makes insurance, the cost of insurance, go up. So we also have to start to talk to people about their health on a day-to-day basis as well.
That's right. That's why at FinFest, which you were a part of, we've started having healthcare presentations alongside of wealth presentations, because if we don't manage our health, we're going to undermine our potential for creating wealth. Another complaint we get in our Q&As and in live sessions is from people that think insurance is too intrusive. You got to fill out all these forms. You got to have interviews, and in many cases, you have to have health exams. To your previous point, I have little patience for that, but I want someone professional to give a sophisticated answer to the cost benefit of going through the process of actually securing some good insurance.
Yeah, so it is true that when you are securing, if we think about it this way, insurance is a financial contract, right? So we have to give the same way an insurance company is going to give us a guarantee that they'll pay. We've got to give the insurance company a guarantee that we deserve to secure this contract, right? That we have the health that means that we can secure this contract, pay a premium for a standing amount of time, and then transfer that wealth over to our family, right? So there's a lot of representations and warranties being made by both parties at the time of purchase, right? So yes, we do have to guarantee that our health is what we say it is on an application for life insurance, right? A lot of people don't like to have the conversation about health. And normally when we start to interview a client and they're already there's discomfort with the conversation, I already know what we're going to run into. Sometimes when I ask a client, just what medications are you taking? Those medications are kind of a window into,
Right.
What illnesses I can expect and what kind of rating I'll expect to get back from the insurance company. But if people are not honest about that information at the time of application, it's not on an insurance company to offer insurance or to give you a financial contract and say that they're willing to pay for something when you're not willing to be honest about your health.
Yeah,
but some of us oftentimes are really, we don't want to face what it is, right? We don't want to have those kind of conversations. So I think there is a lot there's a lot in our community that I think that we have to wrestle at the same time when we're purchasing insurance. We have to do that work all at once.
Yeah, I know there are different types of insurances, but today we're focusing on life insurance. And you joined us late. I'm talking to Sylvia Austin. She's her own boss. She's an entrepreneur. Her business is helping us reduce the risk in our lives, momentum, risk management, and the risk mitigation strategy, if I can use one big word that I know, is through insurance products. If we were giving away free tickets to a Beyonce concert, people would fill out a 10-page application. So the point is, we have to understand the value and do the work. That's why I'm impatient. I'm impatient because I know what people are willing to do for certain things, and I just want us to become as serious about our lives, about our legacies,
Yes.
about our lifestyles as we are things that are entertaining and sometimes even self-destructive. So thank you for being so sophisticated in answering these questions. Um, Sylvia Alston's company is, I told you, is Momentum Risk Management, and there'll be information available for you to contact her, because at the end of this conversation we're having, there'll be a form for you to fill out if you'd like to talk to a Prudential advisor, because our sponsor is Prudential. I should have started by thanking Prudential for being our sponsor, but thank you, Prudential, for being our sponsor. Prudential and DFREE have been partners for 14 years, since 2011. And I'll tell you, they called us to ask us the question, how can we help you? And they've been helping us ever since. And one of the ways they help is providing licensed professionals talk to people one-on-one without charging a fee up front. And it's important that each of us talk to a professional. However, Sylvia's information is here. Sylvia not only represents Prudential products, but any product that is appropriate for your situation, she can connect you with. And we are grateful to her for the time she spends helping DFREE. Then there's another, Sylvia, I was doing a short video. I do videos for social media, and I did one on insurance. And I said, while I was recording, that you don't have to die to benefit from life insurance. And the man who was working the camera almost dropped the camera, because he had never heard that before. In his mind, the life insurance brought benefits to someone else when you die. So can you talk about, first of all, was I right? And if I was right, explain how I was right.
No, you are. You definitely are. There are definitely a lot of different types of products out on the marketplace to buy. And it really has everything to do with what you're looking for. I think the most important part of an advisor, people buy life insurance a lot of different ways. There are some people who go on to these social media apps, click a few buttons, and they buy a life insurance policy. They never sit and have a conversation with anyone. I don't advise against it. I want people to be insured, but I think it makes sense to talk through your situation, your individual situation, with an advisor, because I think there's questions and answers that you'll get from an advisor that you won't get from merely clicking a button, right? And that's some of the importance of the work that we do. But there's all kinds of insurance products on the marketplace, and it depends on what you're looking to do with the insurance. Insurance essentially is a financial planning tool that many communities use as a way to help them build wealth and create a legacy for their families. Life insurance is most definitely a financial planning tool. And what you're referring to, Doc, is whole life insurance or universal life insurance. And it's the difference between the difference between term and whole and universal life is the difference between renting a home and buying a home. A term life insurance policy is really a product. It's the cheapest way to be insured, and that will give you, for a specified amount of time, usually 10 years, 20 years, or 30 years, it will give you an amount of insurance for a specified amount of time. A whole life policy goes with you your entire life. A universal life policy goes with you your entire life. The difference is a whole life policy is a more conservative product. A universal life policy is a product that is traditionally invested into the market, in the market, and the conditions on the cash value that you grow in that policy has a lot to do with how the market is doing, right? But yes, a whole life or a universal life policy stays with you your entire life. It's insurance that you can borrow against if you need to use the cash value for a down payment on a home, to start a business, to help a kid go to college. There's all kinds of things that a whole life or universal life policy can do. And these are just some of the kinds of conversations that we have with our clients to understand what their needs are. For many people in communities of color, or communities that look like yours and mine, Doc, life insurance is the only way people will inherit any money.
Yes, sir.
They're not invested. They're not invested in the market.
Right.
They don't own homes, right? A lot of people work in companies that have 401ks and they don't even invest in them, right? I've had conversations with people who work at companies. They give them group life insurance through their work, but it's only 1 times their salary. Well, if you can't get by on your annual salary when you're living, if that 1 times your salary is given to your family when you're gone, they potentially can't live on that. But we're not even going to our open enrollment meetings, Doc, to find out what benefits are available to us from our companies, right? So these are just all of the ways that if you're an advisor, right, part of the great work that Prudential does is bringing people like us to sit down and have these kinds of conversations to get people to think, about where they want to be when they retire, where they want to be when they pass away, and what legacy they want to create for their families to have. And I think that's an important conversation to start. The other thing that I'll say to you is this. I don't, you talked about your frustration. It frustrates me as well. But there is a history of financial exclusion in our community, right? We have historically been excluded from conversations about establishing and creating wealth. And if the conversations aren't happening in our school systems, if they're not happening at our kitchen tables, they have to start happening in situations like this, right? So just to pique the interest, to start the process, to get people just thinking about why it's important to start having conversations about financial education. And that's why your work is so important.
Well, what I love about you is that you're not only an entrepreneur attempting to do well yourself, but you're in the kind of business that helps other people, but you're also active in your church. And you mentioned conversations happening in school and at home. I believe that the 80 to 100,000 Black churches in America should all be having these conversations also. And you are a role model for leaders in churches, congregations who are not pastors, but who take this very seriously and support the ministry of the church through a financial education. So I love that. The other thing about Prudential that I'll say is that not only are they our supporters and friends and sponsors, but I commend Prudential because at a time when many companies are backing away from anything that sounds like diversity, that sounds like inclusion, that looks like affirmative action, Prudential actually rolled out a strategy from the highest level. I mean, I met with Prudential's board and they're bought into this blueprints to Black wealth. And it's really amazing that at a time like this, given the politics, given the social pressures being put on companies, that Prudential is expanding its efforts to empower and close the gaps that are the widest. It's not that Black people are the most important people, it's that the gap between Black wealth and other wealth is so wide that the need exists more in the Black community than any community, even though Prudential and Blueprints make these tools and these resources available to anybody who will come, as does DFREE. So you mentioned your family and you mentioned the need for ensuring yourself so that your family can be all right. Here's what I have the least amount of patience for. The guy that says to me, when I die, I'm not going to let my wife get married and they spend my money.
I've heard that too.
I'm not, my kids going to have to make it on their own. I mean, please, this is absolutely offensive. I mean, think about where we were. We celebrate Juneteenth, and the priority for Black people coming out of enslavement was family and taking care of family and legacy.
Yes.
So how do you respond? Because I don't think you want to hear how I respond to people. How do you respond, Miss Professional CEO?
You know what, Doc? It depends. It depends on the setting. It really it depends on the setting. I have these conversations with friends, who have said, and I'll be honest with you, not men, just also women who will say that they are very uncomfortable leaving a ton of money, right? under the guise that the person might get remarried, right? And I've thought about that myself. My husband and I have had conversations about that.
About what? About
if something were to happen, who goes first, right? We have a lot of insurance, but we also have a lot of property, right? My thought is, and this is my thinking, and I know that everybody doesn't share this thought. We had a great run together.
Right.
And I want him to continue to be happy. I want him to continue to be happy.
You won't even know, though. It's not like
I wouldn't even know. And I want my children to continue to have opportunities.
Of course.
That maybe were not available to me when I was a child, right? That's my thought on when I purchased insurance. But again, I grew up with a single mom and a single dad who kept in communication. I spent every weekend with my father, and my parents remained really close raising me. I was the only child, right? They kept the doors of communication open. Both of my parents had really great jobs. My mom was a teacher in Newark. My dad was a dispatcher for the U.S. Postal Service in Newark. But they believed in the power of insurance, and they didn't own property. So they knew that the only way that I really was going to have an opportunity to do all of the things that they may not have had an opportunity to do was if they had life insurance. And so that passed forward, only because my father was ill. It made sense to me very early, the power of life insurance. I try to impart that in conversations when I'm sitting down across the table from people, when I'm having conversations like this, when I'm talking to clients on Zoom or on the phone. What do you want? And you have to start, what do you want to see your family have? What do you want to pass forward? And what I don't want to pass forward is debt and despair. I don't want that for my family. I want the next 3 generations of Alstons to be able to say that they had opportunities, never knowing me. I'm planting seeds in the ground for people I'll never have an opportunity to meet. But I want them to be able to have opportunities that were not available to me. And I know that that's what my ancestors had for me. I know that I am the living benefit of seeds that my ancestors planted in the ground. And so I start from there. And then, I'll be honest with you, Doc, I don't work with everybody. If I get the sense that is not a focus for you, that you care, that you love and care about your family and you want them to be okay in your passing, I have turned down business because I'll tell you also, Doc, I've worked with people who've had this conversation with, going back and forth, go through a lot of problems to write the coverage. They have it 3 or 4 months and then they cancel it.
Yep.
They never bought into the idea. And so they have to have the sense that this is really what they want in order for me to come in, because I'm not selling. I'm just helping you put forth a plan that you believe in, right? So that
planning part is so important. That's why I want people to sit down with people like yourself and look at your whole situation. We should not make one financial decision without figuring out how it factors into our total financial plan, because without a plan, nothing is right and everything is right.
Yes.
I admire you so much because you've turned a business into a calling, and you've turned a calling into a business, and it is absolutely critical. And I think now more than at any time in recent history, our community should know that basically we're on our own, that no one's coming to rescue us. No one's coming to close this wealth gap on our behalf. And so my motto, my staff will tell you, my motto is the only thing worse than not having what you need is not using what you have. Yes. And you are helping us identify options and activities that we can employ. And I really love that. I want you to say a closing word in response to one reality, because I think it's important for us to really reflect on, and that is this: as economies shift and as employee benefits have changed drastically and continue to change, and as the gig economy and entrepreneurship is on the rise, it's going to be much more important for us than it was for our parents and grandparents to have our own insurance, because there was a time when most of our insurance was provided by the place that we worked. Just say a word about that before we leave.
That's so important, Doc. So many things. You've said so many important things. I want to tell you a couple of things. Number one, in our communities, if we are not talking in our churches, if black conversation and black pastors are not, if those conversations are not being had, that we are in probably the economic civil rights period of our generation.
Right.
And if we are not talking to people about money, what they're doing with their money right now, how they're planning, and how they either plan to invest, save, or buy insurance for their families, we are doing them a complete disservice in our churches. That's one. I have to say that.
Right.
Your point about the gig economy: 59 million Americans in 2025 are gig economy workers. What that means is they are independent contractors and they work for themselves in some capacity. That's almost 36% of our entire workforce.
Yeah.
Right? That number we know is going to double in the next 5 years. And so what that means is, just to your point, traditionally people worked for companies and those companies provided medical benefits, they provided dental benefits, they provided 401ks, they provide life insurance. Companies are moving away from that. There's so much money being spent in our government, right, lobbying against having to provide benefits at all as companies, right? We are moving away from companies who are providing benefits to our employees. And what's also happened is people are moving from W-2 employees to becoming consultants, to becoming gig workers, to becoming independent contractors. That means they will be independently responsible for making sure that they have health insurance, for making sure that they have life insurance, for making sure that they are planning for retirement. And so if we are not setting up ourselves with our own independent life insurance, that means we will not be providing for our families, because most people only purchase what they get from their employers.
Right.
And if you're not able, so many people are not really, people don't understand. Typically, only managers or senior level executives get to port and take their insurance with them when they leave a company.
Right.
Most, when their service ends to a company, so does their coverage.
That's right.
So they don't get to take that coverage with them. So if you don't have coverage after you leave an employer and then you don't buy it independently, and now you're less healthy, or worse yet, you're uninsurable, you can't get insurance at all, right? You're not able to create a legacy for your family. And so as the trends change of how we work, right, we have to start thinking about how we also plan out for our benefits, how we mitigate the risk of being underinsured or not insured at all. And these are just the kinds of conversations that Prudential is doing, that you're doing at DFREE, and that I'm doing here at Momentum Risk Management. And these are the kinds of conversations that have to continue.
No question about it. And you say it so well. You know, a lot of people have information, but they can't share it effectively. And you do both. Before we go, what other kinds of insurance do you handle? We've been talking about life insurance, but that's not your only license, I'm sure.
No, we're a full service practice. We work currently in 42 states. We do property and casualty insurance. So I work with individuals. I work with the independently wealthy. I work with business managers and family office practices for high net worth families. I also work with a lot of small business owners. Small business owners happen to be the sweet spot for me right now. If you pay attention to the trends in business, 60% of Black women are starting their own businesses. But oftentimes they don't have the products that they need to not only effectively run those businesses, but to manage them and mitigate against risk. And so that is one of the things that I love to do at Momentum. We get an opportunity to work with small business owners and help them establish their businesses, secure them against risk, and provide legacy and create futures for their families.
Well, folks, I'm sure you want to hear more from Sylvia K. Alston. She is just so articulate and so knowledgeable. And she's forthright. She's not going to tell you what you want to hear. She's going to tell you what you need to hear. And she's going to help you understand what your needs are. So contact Sylvia. You can see her contact information on your screen, on your phone, however you're watching. And then at the end, when we finish this, we want you to fill out a survey form and include information about your desire to talk to a financial professional. I often recommend that people who have financial professionals get a second opinion. There are times when one professional will give you one kind of advice, kind of like a doctor, and then a second professional will give you a different perspective. And if you can get that for free, then all the better. This is the DFREE platform. We want to invite you to join the DFREE community. You can go to dfreecommunity.com and be a part of our platform, be a part of our interactive network, and not just receive information, but give information. You know, what we've decided to do is to not assume that we have all the knowledge, but I found that everyday people learn things and do things successfully. And our greatest need is to share successes and strategies with each other. So come to DFREE, whatever level of engagement you want, we'll be happy to have you. So Sylvia K. Austin, thank you for being my guest. And I'll have you back because I want to talk about some auto insurance and some disability insurance issues that keep popping up in our work. So thank you.
We got tons of work to do, Doc. I'll see you soon.
Thank you all for joining us on Ask the Advisor. God bless.